Dhirendra Tiwari of Antique Institutional Equities joins us now to talk about that. Dhirendra, what does an investor do in a market like this? Is it time to be greedy when the market is fearful? Would you be putting in any money to work at this point, or do you think there are better levels that you would watch for?
In my opinion, it's directionless market, which is the biggest worry in the current context of things. If you look at, for example, the valuations, at 13, 14 times FY14 earnings, I mean, it is neither too expensive nor too cheap. So we are somewhere in between. For us, it becomes very difficult to take a firm view which way the market will move, considering that there are a few events like election. There is a situation on ground which is not improving. Macro environment is not healthy at all. So I think our view is that one has to look at case by case stock sectors and try to find out good value opportunity. Don't look at the index. And I'm sure there are very good opportunities across sectors in the current environment also. I mean, there would be a few pharma stocks, there would be a few consumer names, there can be IT stocks, there can be a few interesting mid caps. So our view is that as a house view, we have said that maybe the market could grow at about 8-10% in the current calendar year. Not very exciting return in comparison to what we have seen last year. But yes, there would be a number of stocks which can give you a good opportunity to buy. So select buying is definitely advisable. I wouldn't say that just get out of the market. I think look at good value, good quality companies where there can be at about 15-17% kind of earnings growth in FY14. Those are the ones which we should be looking at adding to our portfolios.
Dhirendra, we are at levels which we haven't seen all the way since September 2012, and that was the same time that the reform agenda actually began for a large part of the economy, which we've been talking about up till now. Do you think that the markets have pretty much become a bit sanguine or complacent about the economic reform agenda, and they want to see something a little more aggressive now from the government, maybe something like the land acquisition bill being passed faster, etc.?
I think reform was one big driver for markets. If you look at, somewhere middle of last year, market was again looking very uncertain, and probably market would have fallen meaningfully if we did not see certain reforms that we eventually initiated. So I think market did take notice of a few of these things, whether it is broadcasting reforms or FDI and retail, etc. I think one of the biggest reform that is happening right now is the diesel price regulation. So those things are, I think, the factors why market is still holding on. I mean, I would imagine that given the extreme environment that we are living in today with respect to economic condition of the country, market could have corrected even more. So I think there has been some base made based on these reforms. Now, as we said very recently, now it is the time for delivery. You have said a lot of things, but in next 6 months, market, particularly FIIs, will be looking at delivery, how we are able to address the challenges of the economy and how we are able to continue the reform path. So I think market have taken a note of that, and action is needed on part of the government to probably accelerate that.
Dhirendra, we've been talking a lot about how ETFs have been actually redeeming some, or there has been some amount of redemption coming in from the ETFs. How worried would you be now in terms of outflows from the FII basket, and what sort of incremental pressure do you think it could put on the markets?
It can put quite meaningful impact. My biggest worry will be that typically the action by FIIs or any other investment made by non-Indian investors will be dependent on a lot of events like election, etc., and reforms. So I think these two things are the key risks today. For example, we had good news flow on the reforms front right from the beginning of September last year till date, and probably apart from diesel price increases, there are very few left, maybe one or two bills here and there, but not too much happening as far as reforms are concerned. And the secondly, the election outcome, I mean, in the sense that when the elections will happen, what will the outcome will be an important event which investors outside India will be looking for. So I think that creates uncertainty, and in my opinion, particularly the foreign investors are quite wary of uncertain political environment. So I think it will be having a major impact, in my opinion. So hopefully we will have some support coming from domestic investments. Very difficult to say, but let's hope for the best.
How about you, Dhirendra? How are you approaching the IT earnings in general? What kind of a trigger it could be for the market, and in particular, what's the expectation from Infy?
Typically, IT stocks, I mean, the earnings will be driven by two things. One is the growth in US and Europe, and secondly, rupee. So I think there is a incremental positive catalyst for IT stocks. We are seeing some improvement in the growth outlook for the US economy, etc., which will be important from most of the IT companies' point of view as far as revenue growth is concerned. Assuming everything remains same, depreciation of rupee will add to the profitability. So there is highly likely event of Infosys or maybe few other IT stocks beating estimates by a few points. That is the thing I would be looking at, and that makes us quite comfortable as far as IT sector as a whole is concerned. So Infosys, Wipro, Tech Mahindra, some of these stocks we like primarily because of these issues. So I think there is every chance that Infosys and a few other IT stocks which are starting to show improvement in the outlook will do pretty well in this quarter, and maybe few quarters in the current year itself, remaining part of the current year.
Dhirendra, in such a market, would it be an opportune time to sort of build positions in certain stocks? Would you have a buy call on certain counters at this point?
We like quite a few stocks, and assuming that we have to remain invested, that is the precondition. We have our preferred list of stocks. For example, we like pharma sector, so we have Sun Pharma, Leukin. We like IT, so we have Infosys, Tech Mahindra. We have preference for certain consumer monopolies like ITC, Nestle. We have certain NBFCs like Shriram Transport. We have a few what we call consumer facing stocks, which is particularly in the media sector. So there are opportunities in each of these sectors, and one can find good investment in these stocks at this point in time also, assuming that market remains what it is. I mean, there is hardly any improvement as far as the year-end index target is. I would assume that some of these stocks that I have mentioned may outperform by 10 to 15%, which is, I think, the base fair assumption to begin with.
Okay, it will take a very brave man to be putting money in this market for sure. Dhirendra Tiwari, thanks as always for joining us.